With interest rates continuing to rise, it is now more important than ever to know where HELOC interest rates are right now, how much they've changed, and how exactly that interest payment is calculated. Let's get to it. What is up, everybody? My name's Jay Costa. I'm a real estate investor and agent here in Northern New Jersey, and if you get any value out of this video, please smash that like button down below. Consider subscribing and definitely leave a comment down below. Let me know how you are using your home equity line of credit in this ever-changing market. So if you didn't already know, a home equity line of credit, or a HELOC for short, is basically a revolving line of credit based on the equity in your home. I've made many videos in the past on what a HELOC is and how to use it. So if you'd like to learn more about the basics of a HELOC, definitely check those out. I'll put a link in the description box down below. So first, we're gonna go over how the interest rate is set on a home equity line of credit. The interest on a home equity line of credit is pegged to what's called the prime rate. And the prime rate is basically pegged to the federal funds rate, which is what is set by the Federal Reserve, and the rate that has been of much discussion all of this year. So here's how it works. As of now, the federal funds rate is 3.25%. Now, the prime rate is pegged to that number, 3.25%. It's always 3% higher. So if the federal funds rate is 3.25%, that brings the prime rate to 6.25%. Now, when you get a HELOC from a lender, that lender sets a spread based on that prime rate. So the interest rate that you get from the lender will be prime plus a certain spread. Obviously, when you shop for a lender, you're going to want that spread to be as little as possible. Check the link below in the description box, as well as up here in the corner, if you want to know more about what my favorite home equity line of credit lenders are, as well as how to choose the best one for your specific situation. HELOCs have been around for a long time, but there's one thing that has been changing very drastically recently, and that is obviously the interest rates. The prime rate was 3.25% from March of 2020 all the way until February of this year, 2022. But since then, it has gone up 3 percentage points, and it will continue to go higher as the Federal Reserve combats or attempts to combat inflation. So as of right now, since the prime rate is 6.25%, and I would say the average spread or margin that a lender is putting on top of that prime rate is about 1 to 1.5%. You're looking right now at about a 7.75% interest rate on your home equity line of credit on average. That is a far cry from the mid to low 3% rate about 9 months ago. Now, lastly, I wanted to go over how exactly this interest payment is calculated by your lender, because it's very important to know the details on how they see what that interest-only payment is going to be. Unlike a fixed rate mortgage that's based on an amortization schedule with a fixed rate, a HELOC has a variable rate, and it's not set to a specific loan amount, but it's more set to a daily average balance. A daily average balance, or an average daily balance, is exactly what it sounds like. It's the average balance per day on your account in the span of 1 month. So the lender takes your average daily balance and applies your APR that you have at the time on a per day or per diem basis. To make this a little bit easier for you to understand, I'm going to give you a real life scenario. I'm going to show you my actual HELOC statement from September of this year. My average daily balance on my HELOC in September of 2022 was $22,950. My APR at the time was 6.54%. So this was prime rate plus the spread that I agreed to pay my lender. I think it was about 1.04%. And to get the APR applied on a daily basis, they simply take your APR and divide it by 365 for every day of the year. So if you take my APR in September of 6.54% and divide it by 365, that means I'm paying about 0.018% of interest per day. And when you apply that to the $22,950 average daily balance, it equates to about $4 a day and $123 per month. Remember, a HELOC is interest only for the first 10 years. So when you're making, or if you're making, that minimum payment of $123, you're not paying down the balance at all. That is just interest. So keep that in mind. Now, since September, the Federal Reserve increased the federal funds rate by 0.75 again. So going forward, my APR is going to be 7.29%. And the lender will make the calculation using the average daily balance based on that. You take 7.29%, you divide it by 365, and that's the interest that I'm paying on a per day basis. And if these changes are made mid-month, in the middle of the month, they'll basically take a certain part of the month and apply one APR, and then the other part of the month and apply the other APR. And if you pay off or borrow more from your home equity line of credit, they just take the average daily balance on a per day basis and apply the APR based on that. That is it for today, guys. Thank you so much for tuning in. Let me know, like I said, in the comment section down below, how you are using your home equity line of credit in 2022. It's much different than it's been the last couple of years with all-time low interest rates. How are you planning for the future, and how are you using your home equity line of credit to get you there? Let me know in the comment section down below, and I will see you next time.